Joining me now to look ahead to these reports is Alexander Yokum from CFRA. Alexander, welcome. So Wells Fargo has a lot of consumer business here. How relevant is that to the regionals, which I think of as dealing more with small businesses?
Yeah, thank you. Thank you for having me on. Yeah, I think it is somewhat relevant. I think investors were concerned with that net interest income downgrade in terms of the guidance, and I think they are reading through that into the regional banks. You know, with Wells Fargo, their deposit balances were actually down. Loan balances were flat. So maybe there's a little bit concern with regionals that there could be some weakness there. There was a lot of optimism coming into, this Q2 print for the space, strong rally since April. So I do think maybe we'll have to wait a little bit longer for that improvement from those regionals.
Why is credit quality still so good with the worries about tariffs?
Yeah, it's been pretty remarkable. If you think about in April, there was significant sell-off from these regional banks and Wells Fargo, concerned that tariffs were going to hit the consumer, and it just hasn't happened. What we've seen is spending trends surprisingly resilient. We really haven't seen downticks in spending, and yeah, credit quality even for Wells Fargo was strong. Actually, improvement year over year. They saw improvements in commercial real estate, auto, credit cards. So the consumer is strong. I mean, there's a phrase that we've heard, you just can't believe what consumers say anymore. You have to look at what they do. And as long as they have jobs, they're spending. People's
politics seem to influence how they say they feel about things, but not necessarily what they're doing with their wallets. But what about anecdotally what we've heard about these small businesses with merchandise stranded, say, in China, that now perhaps with tariffs they can't afford to bring over and they're in these dire financial straits? Are those stories, the reality of them, so isolated that they're not going to hit any particular regional, or is it just going to take a while?
Yeah, actually, I would say they're isolated. It is a small percentage of companies. A large percentage of these companies already prepared a bit, in the last Trump term to deal with tariffs. So we're not actually expecting a decline in commercial credit quality. In fact, I would guess the average regional bank will see an improvement in credit quality this quarter. The tariffs just haven't really had that impact. There will be isolated events, perhaps one-offs, but overall for the group, it should be pretty strong. The actual exposure for regional banks to those struggling industries is just a couple percent, and they can handle a couple of percent of struggles.
For investors who might not just be buying the KRE for regional bank exposure, how right now in 2025 are you segmenting the banks, the regional banks, as far as how you expect them to perform? Is it by size? Is it by geographic influence? Something else?
Yeah, so we do like the geographic influence and sort of the banks that have handled the rising rate regime well, because those banks are more prepared to play offense today. For example, a bank like M&T Bank, a regional bank, they were quite defensive. They cut their commercial real estate exposure. They didn't have these large unrealized securities losses that a bank like Silicon Valley Bank had. Today, they're sitting on a ton of excess capital, so they can really lean into loan growth if that occurs. And if it doesn't, they can repurchase shares. We're expecting a bank like that to repurchase 15% of their shares by the end of 2026. So that will be a bid on shares, for the next few years. They're really well positioned for growth in our view.
If we're going to get a data point this regional bank earnings season that's surprising enough to shift your thesis positively or negatively, what do you think it's going to be?
Yeah, it probably would be in the net interest income. Again, there was a little bit of fear coming out of that Wells Fargo print today that could hit the regionals as well. There's been hope here that regional banks would see net interest margin expansion. Generally speaking, regional banks don't have the benefit of those capital markets, right? Which we've seen, pretty strong momentum as of late. So they have to rely on net interest income. So if we don't see margins improve, then that would be concerning. And, we look at deposit costs. Non-interest-bearing deposits were declining, and there's some hope that would stabilize this quarter and perhaps grow. So if we don't see non-interest-bearing deposits stabilizing, which means consumers and businesses are still really looking for yield on their accounts, that would be a bit concerning.
We'll keep an eye on it then.